Hey everyone, and welcome to another Central podcast. We're super excited today. We have Gal Borenstein with us from the Borenstein Group. How are you doing today, Gal?
Doing great. Thanks for having me on your podcast.
Of course, of course. So Gal is really into well, a lot of different things, but we're especially excited to dive into more of the data analytics of the world, the business world, and see the importance of this and how we can really turn ideas and visions into reality. So Gal, if you can just let us know a little bit more about the Borenstein Group, where it came from, and what are you about?
Yeah, I'll give you the short version, of course, for the podcast. But I started the Borenstein Group in 1995, which seems from another century. But actually, that was the first year when the internet and the web browsers became kind of the face of the internet. And in the early good days, big advertising agencies looked at dot coms and the people that kind of started things very differently than they are today. They looked at them as small companies that don't have big advertising budgets, and therefore I was able to start an agency that really had three promises. Number one is you're going to have the opportunity to work with the CEO, which was me. I had a techno MBA, so I had vertical market knowledge about telecommunications and data communications, which meant that I can promise my clients at the time that I actually understand their technology, so they don't have to spend tuition money on learning their business, which is traditionally how agencies work. And the third was really to kind of have a new mantra for being in advertising and marketing and branding and public relations, which are all kind of connected to each other. And our tagline was and still is making creativity a science. And making creativity a science was simply an acknowledgement that all advertising agencies have creatives that come up with great ideas. But if the idea works only once or twice and cannot be measurable, scalable to produce repeatable and predictable outcomes, it's really not really something that you can work with. So by focusing on those three things, giving personal attention to CEOs of smaller companies, giving them what it today would be called a fractional CMO or a CMO, and being able to do it affordably really kind of gave us a kind of a leg up. And 28 years later, we're one of the top 50 business to business agencies in the US, 100% focused on working with technology innovators. Every day there's a new innovation, and that's very exciting because you never stop learning. And that's really what motivates me as an entrepreneur and a founder and a CEO.
Well, super interesting. It must have been a very interesting process and journey for you, starting out in the very beginning of, all these things. I'm interested, what was it like back then and how has it changed in terms of getting this data, processing this data, and, doing the job you carry out?
It tremendous change. I would like to kind of tell it maybe like in the biblical model, which was let's call it Genesis. The genesis of the internet was that there was no measurement because you put the information on a website, which at the beginning was really an online brochure for companies. And most people did not have broadband, which meant you couldn't put videos, you couldn't put specific content assets that could be measured in any way. So at the beginning, which we're talking about like literally year 2000 and 3 years before, which where a lot of the .com came to place, there wasn't really a measurement or really an expectation of measurement because there were multi-channels that they were using, and the internet was new. Then came really kind of a bunch of companies that started to think about how do you prove that there's ROI in putting advertising and pay per click and all these different things in different platforms. And really, the one that stood out the most was Google. And Google figured out something that nobody else figured out, which is people want to spend money, but they want a return on their investment. And they want a visual way to really see what is working and what is not. So in the beginning, Google was definitely not providing a lot of data visualization as we call it today, simply because it was an evolution of thinking about what would make it easier for marketing managers, for chief marketing officers versus engineers to actually analyze. So if you think back to the genesis, if you will, of the industry, it was really a bunch of spreadsheets. And the ability to download the spreadsheet was a huge deal. And you were looking at so much data, you really had no way to kind of interpret it. Then really kind of the evolution of kind of big data began, and companies discovered that not only the big companies can get leads and the demand generation and brand awareness, you can also be a very small company with very smart technology, and you can establish a presence on the internet and specifically on Google, which fast became kind of the golden standard of where business people are going to get information, which was a brilliant step that they took versus other browsers. And they locked an ecosystem that allowed people to search, but also determine where the information is going. And then, most importantly, um, that next step was really how do you create a dashboard with analytics that give you some metrics to actually measure what you're doing. To say that it was perfect, it wasn't, but it was a brave and very effective way to help marketing people to communicate with the sales team and then have the CEO decide who's right and who's wrong, which wasn't uh, scientific. It was still qualitative in nature because every company has a different culture. You can say we're the best in something, but then if your people are not best in something, what happens? If you make a promise that you have the best customer service in the world, but you don't, that backfires, uh, just as it would a TV ad. So that really kind of was a great evolution that really defined the next generation that came after, which was data visualization and business intelligence, which were combined together. Data visualization simply meant that now instead of looking at spreadsheets, you can see trends. And while today we take it for granted that when you go to Google or even LinkedIn or any other place and you can see where your dollars are going, that there'll be some metrics that create kind of a consensus, if you will, in the industry that that should be the case. And the fourth part of it really was the coming of AI. And AI basically is changing everything. And we're still at the, let's call it the beginnings of what AI can do and what it can do. But it definitely increased probably 100x increase in details and attributions and metrics and key performance indicators that allow us as people in the advertising industry and the marketing decision makers to really understand what is right, what is wrong, how can I kind of get something customized, for example, how can I create mass customization, which is huge, how can you generate a robot or intelligent being that replaces a whole department of 10 people that are telling you, we're doing great. We're failing in everything we're doing, into having kind of a AI agent basically telling you these are the trends, but here's how you can fix it, and thinking much faster than a human being.
Well, I think you've laid an amazing groundwork of the fact that, knowledge and understanding what's really going on can bring a lot of power to a company. Now, I'd love to dive a little deeper into the Borenstein Group and how you guys are finding customers, how you guys are helping customers, what that process really like looks like, how you're changing, the dynamics. So starting from the beginning, do people come to you, or are you coming to people? How do you guys find companies that are in need of your services?
Well, there's a adage, a joke in the industry that's been around for a while, which is an American tourist shows up in Buckingham Palace in London, and he wants to see the whole palace and the museums around that. And he looks at the grass, and the grass is so green and lush. And he says, I live in Kentucky, Kentucky bluegrass, and I can never get the grass to be that green. He catches one of the gardeners that were cutting the lawn in Buckingham Palace, and he says, how do you guys do this? And the British gardener basically says, we're not doing anything special. We just water the lawn every day for 400 years. Those 400 years really are a metaphor for how you need to have three things in place at any given time to grow. And specifically the Borenstein Group, at the beginning, it was the promise that we will try to create metrics of ROI. And a lot of them were qualitative. Some of them came by interviewing the CEO and say, what is of value to you? While other people in the industry said, well, the direct mail used to be the standard. And, if you get 1 to 3% of your million postcards that you send to people, which sounds ancient right now, um, you will be able to get a return on your investment. So if you're between 1 and 3%, that was the measurement. So everybody adopted that type of approach to say this was the only marketing experience that you could measure. But then came the Google, and we were one of the first companies to actually pay attention to it. And while we're not experts in Excel sheets, not even today, myself, I view it as an obstacle to getting the information, but I do know that without that information, I will not have the right data, is to go really to again, to the companies and ask the question, what is the most valuable return that you can get out of having a campaign or sustained presence or a brand resonance that exists with your clients? Are you trying to really market to existing clients, or are you trying to build trust with a new audience? And along came social media and broke Google Analytics as well as the only solution, because now terms like engagement, terms of how long do you stay on a video that was reported as people clicked on it, so it was great. But then you find out that they're scrubbing the video and they're just looking at 5 seconds, which created YouTube Shorts and Instagram Reels and Facebook stories. All these different things are a result of people understanding that it's not just measuring, it's measuring the right things. And it always kind of reminds me also of one of my favorite historical figures, if you had the chance to meet, type of question, which is Albert Einstein. He was asked the question, what's valuable? And I'm paraphrasing, of course, but his answer was, not everything that counts can be counted, and not everything that counts can be counted, or the other way around, which meant that not everything has the same value to different folks. So you still basically, we're still basically following that mantra, which is you have to customize your metrics. You have to customize it based on the audience. And the visual I always give new customers is, would you rather have 5 people that have decision power of buying $5 million each, or would you rather have 10,000 people that are approaching you and you spend a year basically getting maybe 3 or 5 of them to be customers after 3 or 4 years of effort? And obviously, nobody wants to be the other guy. So they take that into consideration, and we insist on creating a benchmark at the beginning, knowing the benchmark is just where they are, and continuously informing them and changing the way we do things, which the digital advertising world has changed, and made it very comfortable for non-engineers to actually participate. Hence, marketing managers and chief marketing officers. That's been like the biggest kind of the comfort level that we ever had. Yet AI is again changing the game uh, and creates a lot of great opportunities to measure, but at the same time, a lot of fallacies and a lot of made up metrics that are still in the what we call ghost of the machine and hallucinations, as they call it. And you really need to still have a human involved.
I'd love to dive more into your guys' adoption and approach to AI. I know a lot of people are, hesitant based off, the very things you said. How do you guys approach it, and how do you see whether or not it's really worth it for a company to adopt those tools?
I think everybody would agree that the first time where we heard about AI and ChatGPT came out, OpenAI, the first reaction was, well, it's kind of an entertaining tool. I put some information and it spits back information. Then it became, I can search for information much faster than using one of the search engines like Bing or Google or whatever. But very quickly, the next challenge was that people start saying, oh, my job may be gone if ChatGPT takes over it. And really kind of the AI agents that are AI bots that are being created and customized, whether it's a CRM, whether it's for sales, whether it's for marketing, whether it's for operations in the company, are really kind of a game changer because they allow you to actually have a very, very smart human being with 100 years of experience to accelerate the decision making that you might be making, but you still need a human. So, we tell all of our clients, it's a great tool to have, but the day you basically start putting value on what you're doing with a specific knowledge of your company, those numbers will become as meaningless as the first numbers that we mentioned at the beginning of the podcast, where you're measuring based on X and Y percentage based on an industry average. And the industry average does not mean anything. It has to be customized to your company. It has to fit the culture of the company. It has to fit the way the sales force is operating. In certain industries, for example, like if you think about a luxury diamond chain that sells diamonds, uh, they're looking at very particular audience with high buying power. And unlike maybe something that you might get at Walmart, which would still be a diamond, but it would still cost differently and be priced differently. So, how do you get the people that are specific uh, to your target? And the answer has not changed. So, with AI, it will make it a lot faster to implement uh, sales organizations, customer relationship managers getting feedback, but we're still basically getting fallacies that we pay attention to the Borenstein Group to. And I'm sure we're not the only ones, but I can tell you that in the past year, just from personal experience, being on LinkedIn and being fairly active, we got about 8,000 followers, organic. You see on LinkedIn, what happened is LinkedIn changed its model, and it used to be a great place to network, and still is with other people with qualifications because you can see their resume, you can see where they're coming from, who you're connected to. But now with AI bots, almost every company that is in the business of lead generation decided that they'll let ChatGPT basically decide what is the greeting that needs to come to you. And in fact, it's created in a way that mimics human behavior, which is, hey, I'm writing to you to see if you want to talk to us because one of your clients, which was pulled out of a database and not a real conversation, recommended that we speak to you. And it used to be something that happened 5 times a year last year. Now I get maybe 300 to 400 emails per month from companies that are literally using the same script. And just the way we learn how to protect ourselves in cybersecurity, and it's never completely successful. Don't click on this. Don't click on phishing. Don't click on doxing, whatever it is. Now we're at the point where AI is kind of losing value because of the same strategy, which is I, as a sophisticated buyer, simply because I've seen it enough times, I can read very quickly in an email the difference between a human being and a non-human being that is trying to get to a conversation. So business intelligence is very important. AI is a very good tool to support it, but I think we're just at the cradle of the evolution of what works and what doesn't. So even appointments that are being set by companies by the bots, that doesn't mean that the person on the other side is actually set an appointment. They might have set a date, but in the first 2 minutes of the conversation, if the person on the other side of the conversation is not knowledgeable about the company, and they're really selling the same exact thing that everybody else is selling, you're back to not being unique. You're back to not being branded with a value proposition. And then your value proposition, if it's the same like everybody else, then why would I pick you over somebody else? So I think that is really a challenge for the industry. And I look forward to seeing how the industry resolves it. But it's definitely not the case that to say today, as we speak, and I'm sure in 3 years or less, I'll be proven wrong. But right now, I think there's a lot of distrust in AI, while uh, people appreciate and operations appreciate the speed by which it operates.
Very, very interesting how you described how the potential of AI and the things it's already accomplished, but we're just seeing the beginning. Like you said, it really still is in
Yeah,
infancy. It's going to be very interesting to see the different branches that grow from the little tree it is. I'm curious with all these changes and these processes that your company has been sounds like it's been doing great at. What's your guys' future plans? What are you guys looking forward to? How do you feel like this industry is going to change?
it really is the ability to kind of embed personalities, buyer personas, along with mass customization that allows you to really use real knowledge versus knowledge generated by a robot and bring it together to create an assistive tool to help find solutions for our clients. So if a client, for example, is a large business to business service provider that's trying to reach another company that has probably 19 managers until you get to the right decision makers or the procurement department that actually make the difference between writing a purchase order or not. Um, the difference is you can now use that information to connect the human factor and integrate it with kind of the data that you can collect with AI. But at the end of the day, single most important focus is the word integration. Our model is still 70/30. 70 is understanding our client culture. By culture, I don't mean how great people like each other inside the company, which is not a bad thing. But when it comes to marketing and sales and branding, you need to generate outcomes. And those outcomes depend very much on culture of the customer relationship management, whether you use HubSpot or you use Salesforce. Uh, Everyone has a tool, but very few companies know how to leverage it. So the result is we need to put a lot of content out. No, we don't. We need to put substance content that actually reaches less people in a niche. And if you do that, you differentiate yourself from other companies. So right now, we are doing better than before because we literally just follow the same formula that we always use, which is it's about contextualizing the information, understanding the psychology and the consumer model of how their customers are looking at them in terms of what's the value add, and only then use kind of the KPIs and ROI and all these different things that must be part of the process. And yet, uh, another kind of fallacy that people tend to think before they get engaged is that sales and marketing work great together now because of AI and because of all the business intelligence and the data visualization. Uh, that's still not the case. The marketing folks, which consider themselves to be kind of the architects of what is the message and building the buyer personas, uh, create a great kind of manual, if you will, for engagement. And then the salespeople are still basically complaining that the leads that they're getting are not accurate or the information got there, but there was no engagement. And then you have the CEOs and the chief marketing officers trying to bridge the gap between them, knowing that not any one of these groups is going to be perfectly happy, but overall it's going to move a company forward to a better position than it was before.
No, I'm interested. Obviously, you guys are the experts in this field, and you've helped people really see this full picture. And I feel like you've kind of described. You first got to, know what you're looking for. What's your outcome? What are you wanting to really measure? You have to know who you're really targeting. How are you going to target them? How are you going to make that specific? You feel like that's the basic blueprint for, if a company was wanting to, improve on these things, should they follow that script, or how could any other company do this themselves?
I think that the single most important thing, which is a result of the integration of social media influencers, uh, looking at the consumer part of the market, or in business to business, which could be reviews that you see on one of the review sites for technology products. And I'm focused on that because that's kind of our expertise. Um, it's all around the world trust. Digital trust is still evolving. And while in the very near past, there were trade shows where you met people and you were able to kind of create a human connection. Now, especially post COVID, a whole new dimension has been created where it's meaningful to have a video conversation like we're having for a podcast, for example, versus an audio, right? But companies don't pay attention to the fact that it's not their unique value proposition. It's their unique value proposition contextualized with the psychology of trust. And the psychology of trust is based on being authentic, uh, showing your expertise so people can trust you. Make sure that the employees uh, of the entire company and the CEO uh, promote themselves in a way that is genuine. Because when it's not genuine, employees go to Glassdoor and put bad reviews. And when somebody's evaluating a company, we don't no longer control our message. And then you have social media. So what changes that digital trust is all about how do you create a brand for a company that takes the internal values that equal quality and advancement, if you will, and then matching it up with a world that you don't control by doing some of the things that I just described. For example, being authentic. Being authentic could be, for example, that a company that is not as big as the other company saying we're smaller, but guess what? We work harder, and we are trying to uh, put a lot of more effort than the other company that might be bigger, but they move in the speed of an elephant. We're the guys that move in the speed of light, and providing proof points that allow that to happen. Customer testimonials. We used to be limited to providing 3 customer phone numbers to check the reference. That doesn't exist anymore because nobody wants to be bothered with getting testimonials from customers repeatedly. So you have to replace it with use cases, with case studies, with rich content that builds the ability for a company to have a digital footprint that says not only we're good on the inside, we're good on the outside. And that really kind of establishes credibility that then can be measured in the context of the traditional KPIs that we're used to. So, all things considered, uh, focusing on building digital trust uh, and being able to decide what it is for this company and what it is for another company, and making sure that the external part of the world and your internal world in your company uh, are aligned is the single most important difference that we see between companies that succeed and companies that are failing or flailing or really kind of not getting it. And the majority of companies won't get it for a little bit longer or will fail and go out of business simply because of the fact that uh, people control trust on the outside more than it used to be.
Building digital trust. I mean, there's a lot behind that, and I love the insights that you gave. Super powerful, and like you said, super important for the day and age that we live in today. Well, thank you, gals, so much for the amazing insights you gave into the digital marketing world, how that's changed, and gathering insights, making it really valuable. Before we let you go, is there any other insights or things that maybe you've learned that you feel like are important for people to know as they grow their business in this digital world?
Yes, I think that the single most important insight that I can share with your audience, and I do share almost daily with people, is that we tend to think of everything that is being marketed as a product. And the word product, at any time in history, if you can take your product and put it in an Excel sheet or whatever tool you use, and put it next to another company that says, we have the same features and the same pricing, or we do an extra thing, that's not what's going to win the day. What's going to win the day is how you articulate your value. And that means that you can be a premium player with less features if you can prove your value. And that value is understanding the target customer, not based on their numbers, but based on their psychology of how they buy things. So that really is the disruptor that people that are not coming with that background are missing. And that's the difference between companies failing or succeeding, especially in the new software and service environment, which we all try to kind of adapt into. So there is no formula of 1 + 1 = 2. Um, I say jokingly, but seriously, the single most important insight is if you can create 1 + 1 = 3, then you don't have value. You're a commodity. So products need to become solutions, which means a human is adding a value add to something that is scalable but doesn't have a distinction.
Well, I don't think I could make that statement any better. I think you really nailed it right there. Well, thank you so much, Gal, for tuning in with us. Thank you, everyone, for listening in. Be sure to check out the Borenstein Group, their website. See, how they're doing these things even more. A lot to learn from them, especially if you were to partner with them. So, everyone, check that out. And thank you, Gal, for joining us today. And I hope everything goes wonderfully with your company going forward.
Thank you so much for having me today.
Of course. Have a good one, everyone, and we'll see you in the next episode.